Right, it's 12:30. Let's kick this off. So we're at quite an interesting inflection point in markets here, particularly with regard to equities, because we had a bit of a late sell-off last week, but looking a bit stronger today. There's Trump was a bit more conciliatory about the trade war over the weekend. We've also had some sanctions against Russia to deal with, so a fair few things moving markets. But obviously the big question, do we get another down leg in equities, and what's the outlook for the dollar? Two things we'll definitely be addressing today. Any questions anytime, certainly feel free just to shoot them through to me. I'll either answer them as soon as I can or just at the end of the webinar. Well, let's skip over to the trading platform. Right, traditional format here. We'll just kick off with the currency markets, move through to equities, then the commodities. Any other markets you want me to cover, obviously please just let me know. So, nature of the beast here with the euro. This upward movement here, there's no particular evidence at the moment that it shouldn't continue. There is a bit of a kind of long down sloping trend line that could potentially be a worry, depending on how you draw it. Comes down pretty close to where we're consolidating at the moment. So if we do get another big break through 125, the break of this down sloping trend line, if you agree it's in the same vicinity, would actually add weight to the move. But you can kind of see why we've been consolidating for such a long time, if we are at the cusp of this sort of big long-term trend line. Because it is quite a change in dynamic at play, but it's definitely an uptrend that we're dealing with. We're consolidating within an uptrend at the moment. Obviously, it can become a deeper correction, but we don't really have any particular evidence at the moment for which one is going to be. And there's almost nothing to be learned from. We've had various pin bar price candles showing up on the weekly chart, but they're all meaningless while we're in this sideways range. And we zoom into the daily chart, we can see a bit better. At the moment, it's tricky to place longer term trades anywhere except really the top or the bottom of this range. Now we've got intermediate levels which have worked a couple of times, obviously in here the last couple of times, and if you're using this level, didn't really work here, but we've had a little bounce of it at the tail end of last week. But again, I wouldn't put too much weight in this particular pattern here. It's in the middle of a trading range. So while we're in this bottom section, I'm still looking for opportunities to get long the market, hesitantly looking for short positions up in this top area of the market, because obviously the longer term trend is still up. We'll have to, at this stage, I think we'll have to broach the break of this bottom support line as we get to it. But I still think probably with the support of the 200-day moving average, we maybe don't even need to drop too much further down. So this level here obviously being an obvious one. So should we take out this support? Yes, it will be significant because we've been in this range for a while. But these ranges that, the levels that contain them, it doesn't have to be perfectly horizontal. So even if we get a drop down here and rally straight back up again, we're still generally within a range-bound environment. So that will be something to look out for. A drop down to 121.60 again, or down to 120.80. But until that, it's of course we want a move back above the moving averages could be the first signs would break to the top side, but this price action has just been very, very choppy and pretty hard to ascertain. So not a lot more to add there. I mean, this is just a difficult market to trade right now, the euro. We're waiting for a breakout to put us back into a market that has a bit more rhythm. Switching gears to the pound. So we had an interesting couple of days last week where we had this big bearish engulfing candlestick, again right in the middle of the range. But it did look a bit ominous because we had that big kind of big drop from near the top of the range, edged higher, and then another big leg lower. Looked like we were heading down towards the bottom of the range again. but we completely reversed those losses the next day on Friday, and since then, as of today, we've broken through the top of these highs here, and we're the highest we've been in several days. So, there is some weight behind this move because it's the market tried to drop down through 140. 140 held as support, and we rallied off 140 again. So it's that big round number that we're toying with here. Obviously, we got capped here. We broke to the top side, came back. It acted as support once, got a false breakout through it, followed by a big strong candle to the upside. So, a good amount of evidence to suggest that we can push further from here. I had this trend line drawn in previously, which basically sort of says, well, okay, we're part of a longer term move higher. This broken trend line is broken. Now we're looking for the move to continue to the top side. So that's certainly a possibility, but it's still, we're still basically in a trading range. If you're taking these signals in the middle of the range, just be wary that they're less reliable. So really, to start trading on dips, you really want to be out of the trading range. You want to see a move out of the trading range, and then, but you want to see this taking place out here is really what you want to see. In the middle of this trading range, it could drop down, up all over the place. It's just a lot less reliable. So we'll have to see how this particular move manifests. But at the moment, there's some scope for it to move up and get to that kind of breakout scenario. But for me, there's not enough, probably not enough evidence quite yet to trade on that bounce from 140. So two pretty range-bound markets to get things off. So not the most exciting, but actually dollar-yen probably a bit of a change of pace, because that was where we saw some pretty steep declines. Now it's tempting, if we switch out to the weekly chart, we can see what's happened here is that this was a base that was, we had a steep drop, based out, massive rally. We've gradually grinded our way back down to this breakout area down here, which happens to be the 105 round number. And so if you see on this weekly candlestick chart, we've had quite a decent bullish candle here, a bullish engulfing candlestick off the 105 level, and it followed through for the next week somewhat. And at the same time, if we drop down to this daily candlestick chart, you can see that this little channel has been broken to the top side, retested, and we're going for another little push to the top side here. But what I would caution is that we're still very much in a downtrend here. Of course, we've had a bit of a slowdown in the pace of the downtrend at 105, but all these apart from the 20-day, which is starting to slope a little bit upwards, reflecting this bounce here, the 50-day still much down. We're obviously above it, and we're very much below the 200-day moving average, which is sloping down. So for me, what I'm looking for is a potential area of resistance to see this market head back down. And so one area to look out for is basically the 108 round number, or just slightly above it, because you can see we actually have this spike low here, which actually does correspond as quite a significant long-term area of support, where we had this low here, we had a kind of false break out of it, and we pushed back to the top of the range there. But if you see that low level there, which we've zoomed out to, feeds right the way along to these two lows that we had before that breakdown in the price there. So that corresponds with the 108 level. It also corresponds with some Fibonacci levels. So it's a 61.8% retracement of this leg down here. But if I also drag this up to the beginning of this longer term downtrend, you can see it's actually the 38% retracement as well. So there's a confluence of a few things happening in this kind of area with these lows, this low, long-term swing lows, Fibonacci retracements, and obviously just above the top of this trading range here, where we could see people trying to trade the breakout of this level, potential for a false break and a market rolls over. So that would be something to look out for, how the price reacts up at this 108.10, say. So what we're looking for is this little bullish turn in the market to get a bit more legs, but maybe roll over fairly soon. Switching gears to indices. So obviously the 200-day moving average in here in the UK 100 in the FTSE is pretty flat, and so obviously we're kind of oscillating either side of it. But yeah, before it was always modestly sloping to the top side, and since the big drop that we had at the start of the year, it's now pointing modestly downwards. But we've been going fairly sideways. We took out those correction lows there, but it was basically a false break, and we're pushing back up again. So I think probably at this stage, again, it's a range-bound situation, and probably the most reliable trades are going to be these two lows here, which I think did play a part, and we tried to push above, drop, didn't get as far. I think these levels are significant, but also just the highest we've reached since the correction, around at 7,340, somewhere in this zone, up to and below the 200-day moving average, the market could roll over again. So potential for short-term upside if you're trading on shorter-term charts up to there, because I think we need to test the top of the range again. But obviously keep in mind it's a range, so we could get all sorts of chop before we actually get up to these levels. So yeah, I mean, still potentially looking for another leg lower, but I think you just, rather than trying to predict what these indices are going to do, whether this in fact is a double bottom and we're going to run up straight up to the highs again, let's just deal with the situation we're currently in, which is actually that they're pretty range bound. They, consider that a pretty equivalent low to that one, and we're looking for a pretty equivalent high up here to match this one. Moving over to Germany, you can see much the same sort of situation here. We've got a nice sort of triple bottom in based on that first correction low, but we haven't quite managed to get up to the post-correction highs again since. And that happens just below the 200-day moving average as well. So struggling a little bit at the 50-day moving at the moment, but I don't think we should really be paying too much attention to the 50. While we're in a range-bound environment. The price is going sideways at the moment. So, these downsloping moving averages not going to matter as much when we're not making new lows, because we're making actually just flat lows at the moment. So it's not a downtrend. So don't use trending indicators like the 50-day moving average when it's not a downtrend. It's sideways at the moment. So again, looking for opportunities, probably most likely up near the top of the range, looking for it to sell back down again. Obviously, if we get a break through the top of the range, then we have to reassess. Switching gears to Wall Street. So you can see that actually, I wanted to pull this out to a weekly. You can see that we had that next big leg lower here, and this was that weekly swing low. You can see marked by the fractal. And we tried to push up there once, tried to push up there again with a false break, and we're just sitting below that level at the moment, that 24,240, call it. And then obviously these, is this little set of lows here, which helped cap that initial drop within the correction. So still, you can see that, of course, the long-term trend is still up. So we're expecting the trend to resume at some point. But we're in a pretty kind of choppy down leg at the moment, and it will be interesting to see if that 50-week moving average does in fact hold or not. That will definitely be a level that will be, if we get down through this low, it will be that 50-week moving average that gets challenged, and it has worked on the last couple of occasions. So at the moment, we're obviously toying with the 200-day moving average. That's what we mentioned it in the week ahead video, which you can see on YouTube if you haven't watched it already. Yeah, talking about just the 200-day moving average at the moment is actually acting as support, but the thing it additionally is doing is showing us that this kind of medium-term trend is still, well, longer-term trend, I suppose, is still up, but at the moment the medium-term trend's down, so that means we can't really trade in the direction of that longer-term trend just yet. We're waiting for that medium-term trend to change in the direction of the long-term trend. Bit of a mouthful, but I think you get where I was coming from. Okay, switching gears to metals, and I'm afraid to say it's another range-bound market. Obviously, you'll notice that actually of late, gold and the euro looking pretty similar, tucked inside a pretty tight range. So again, difficult to take much reading. For example, you know, obviously on Friday we closed well off the low. That's all well and good. I think it was Wednesday last week we had a nice reversal off the highs here, but again, it's in the middle of the trading range. You'll see these moving averages are just right on top of each other at the moment, both a 50 and a 20 just flat in the middle of where we are. So, you know, there isn't going to be, you know, we've just got to be, for trading on a kind of swing trading basis, we're really looking for dips down to that sort of 1305 median level for opportunities for the market to pop up again to the top side. I think overall, we're still pretty constructive on gold, but you've got to realize that there's a massive level up ahead around from 1360 up to 1375. Has been capping gold for a while now, so if we get a breakout through that, be very very bullish development, but until then got to be aware that could be another downturn. The fact that we're consolidating like this in a quite close range at a significant resistance level, to me is a bullish phenomenon. You know, if the sellers really took over control at that resistance, they should be pushing the price much lower, but they haven't been able to. So it looks a bit more like accumulation. So, but we'll have to see. Switching gears to Brent crude, just the final market that we'll be looking at today. And you can see that we've basically rolled over from the 70 level again. There was a fairly bullish looking candlestick off the 50-day moving average, and that could still hold up, but we had a bearish engulfing candle here, or you know, something akin to it on Friday last week. So we're still in the middle of that range. It seems to me that maybe if this is just a pullback before an eventual break of 70, we probably need another test of this rising trend line, which also coincides roughly with the two moving averages, and 50% to 61.8% pullback of this last leg higher. And you know, maybe you can just draw in this pick up one of these levels. This had quite a big sharp reaction, but maybe even draw it down to here. So 64.60 being maybe probably the last line in the sand before it looks like the market's rolling over potentially into a double top pattern, and obviously the neckline of that double top down here at the start of this last rally. But at the moment we're assuming that this uptrend can hold. We're above all the moving averages, so you know it's a pullback when all the moving averages are in line. That's the kind of thing you're looking for, you know, buying pullbacks within an uptrend. Yep, we can. I'll have a look at the Dow again, Robert, if you like. That's what we call Wall Street. So that's this chart here. I don't know if you missed that. But at the moment we're caught in this kind of correction territory where it's below the 50-day moving average, obviously, but above the 200-day. So we don't know which way it's going to go at the moment. In the direction of long-term trend would be with the 200-day, obviously. Direction of the more medium-term trend is with the 50, and we're just trapped between the two. We can guess which way it's going to go, but we don't really know just yet. Right, let's. I think that's 20 minutes or so, guys. Let's wrap it up about there. Thank you very much for attending today. Good luck with trading this week. It's Jasper Lawler signing out.